Hi, I'm Tobi, and this is the Pure Property Podcast with Track Capital, where we talk about all things property and property investment. The aim of the podcast is to give you our industry insight and knowledge in bite-sized chunks to help you invest intelligently. Now, this week, I am unfortunately without my colleague Nick. He isn't feeling very well, a bit under the weather. So yes, I'll be doing this one myself for the first time. A lot of responsibility on my shoulders, but I am really excited about this week's episode, actually, because we have Chris from Portolio, who are effectively an estate agency for landlords and investors, and it's in Scotland, so a slightly different property market to ours. And what we're going to do in this episode, we're going to take a look at Chris's background, take a look at his company Portolio, and also interestingly, we're going to have a look at how the Scottish property market differs from England. So I am really excited about this. But yeah, welcome to the podcast, Chris. I'm really glad to have you on.
Thank you, Toby. Really glad to be here.
Excellent. So yeah, we'll jump straight in because, like I said, I'm really excited about this episode. Why don't you start off by telling us a bit about your background and how you got into property, and also what you love about property as well?
Okay, yeah, I'll try and do it fairly quickly. There's no glamorous, exciting story. Like a lot of people, I think, in property, and a lot of people in whatever they do, we can often fall into what we do, don't we? And I go back to around about 2002, 2003. I just decided to buy a flat, do it up and sell it on, which went pretty well. I think, to be honest, if I'd bought the property and did nothing to it, it would have increased in value anyway. So I didn't do anything particularly clever, but it was good experience. And I also had one buy-to-let, which wasn't really a buy-to-let. It was, I was an accidental landlord, like a lot of landlords are or can be. And so I was managing my own property. And this again was around about the 2004 time when I set up a letting agency to start managing other people's properties. I just felt, had a certain level of common sense, enjoyed certain aspects of it, the problem solving of it, the helping the tenants, and I suppose delivering a good service, and built that letting agency up over 9 years, actually very slowly, I would say. That's definitely something that I would, if I was to start a letting agency again, I would have a different mindset. But I'm very proud of that company, but sold it in 2013. And so that's kind of my background, has been working for landlords and within the private rented sector in Scotland. Actually, even before 2004, I did a couple of years working in a letting agency in the centre of Edinburgh, which is where I live. And so I guess, many years working in the private rented sector.
Okay, so what was it that you mentioned problem solving, but was there anything sort of about the property market other than that you sort of really love and enjoyed?
I think at the time it was, I probably didn't have that many options for a way to create a business. I think letting agency, property management, I think if you have that work ethic and the right attitude, like problem solving, then it's actually a really good way to build a business. You can really get your teeth stuck into it, and it was a very doable thing. So I really enjoyed that aspect of that time. But looking back on it, I think, to be honest, it's just the people that are in it, the people that work in property, the people that need the accommodation as well. Looking back, I'm very proud of the private rented sector in general in Scotland, the quality and how safe the accommodation is for people, to provide a real service, because the private rented sector plays such a huge role within Scottish housing.
Yeah, I think you're right there, and I think that's something that I believe people don't always understand or grasp when they're thinking of letting agents, especially, is that they are providing a very important service. I mean, the private rented sector is very important. They're providing homes for people. Now, don't get me wrong, you have your rogue ones, you have your bad ones out there, which aren't the best, but on a whole, you have very good letting agents out there with very high standards, and they're putting tenants into good properties, good homes, and they're needed. And I think that does get forgotten quite a lot, actually. So move along to Portolio. How did that then come about? Obviously, you sold your letting agency, as you mentioned. Did you go straight into Portolio, or did that come afterwards
I
later?
wish I had. No, I think there was an element of hubris at that time where, basically I thought I could do anything, and I thought I'll try retail. So I had some money in the bank, more than I'd ever had before after selling the business. And I think with that came a level of stupidity that I'd never had before. And I think that when you've not got much money, it keeps you smarter, you make better decisions. So I was just spending loads of money on this retail business. So in about the space of 2 years, I made every mistake that you could possibly make. So from 2013 to 2015 or so, I had this retail business that failed. I came back to property, not quite like a dog with its tail between its legs, if that's the saying, but I came
Yeah.
back to property. I still had a lot of friends in property and a lot of, really good contacts, and just started working again, doing some health and safety work around the private rented sector, then started doing some work as a sourcing agent. And that was really what led to Portolio, because as a sourcing agent, as you know, you're working for the buyer. You're working for the buyer actually to try and get the price as low as possible, whilst at the same time, being a sourcing agent, you're often getting quite close to the person that's selling. And in my
Mm.
case, it was often a landlord that was selling. So I I found it myself to be quite duplicitous. I mean, it's a necessity. It has to be like that. But also, I realised that the landlords that were selling, they they really needed help. There was a real need out there for a service, to help them sell their properties with the tenant still living there and still get a fair sale price. So in 2017, I launched Portolio with my business partner, Ross McDonald. And Ross has we've worked it out. We think it's maybe one more year than I have in the private rented sector. So about 22 years or 23 years or something like that. He's been in the private rented sector in Scotland. So similar backgrounds. We've known each other a long time. We came together and we built Portolio. And that was about 4 years ago now.
Okay, excellent. So tell us a bit about Portolio then, and what's Portolio's unique selling points? What makes it different?
Well, Portolio is the only estate agent in Scotland which only sells tenanted properties. So that's all we do, all
Mhm.
day, every day. We sell tenanted property across the whole of Scotland. Okay, so whether the property's in Inverness or Glasgow, Edinburgh, or the Scottish borders, wherever the property is, we will talk to that landlord, offer them advice about selling their property, give them an idea of what the value might be just now of the property and what sale price we might be able to deliver for them. And if that's all we do, then great, we've helped. We've helped them make an informed decision. Often they do employ us, which is great. And then we will go ahead and sell that tenanted property. So with the tenant still living there, we will sell that property on the open market. So we're doing it in a super professional way, a way that people understand. It's actually just being an estate agent. That's really all it is. You get an instruction to sell a property. You do your best to present that property in its best light to as many of the right people as possible to secure the right sale price and to find a good buyer.
Yeah, I think that's very, very sort of important point you've sort of touched on there. Actually, is obviously the right sale price, because it's probably a little bit of a dilemma for yourself, I suppose, because when you're dealing, especially with investors and landlords, they're both at totally different ends of the spectrum. Mr. Landlord wants top price for his property because he's selling it, wants the cash in, and Mr. Investor wants best price for the property because it's an investment and they're looking purely on ROI. So how do you sort of bring that happy medium together and have everyone on board? Because it must be quite difficult.
Yeah, the words we use a lot is fair, fair sale price, and it has to be a shared success. So we 100% recognise that. And the property investors that buy properties through us from our clients, they are generally become long-term clients. The property investors, especially these days, they're not normally just buying one property. They're usually building a portfolio for a reason, financial independence, future pension plans, that kind of thing. So it's not just one property that they would buy. So as a property investor, you would look at your building a portfolio, and there's different ways that you can do that. And I'm not suggesting that people would buy all their properties from Portolio from us, okay? But one in every 3 or 4 or something, or however many it is. And in those cases where they buy a property from us, they're getting the instant rental income. They know that the property they're buying is going to have all the safety certification. So there's not going to be any big expense, any big frights at the beginning. They're going to have instant cash flow. So in terms of maximizing cash flow and just quite a smooth, hassle-free option, we really work for a lot of property investors. So although we don't charge any fee to the buyer, okay, we're not working for the buyer, so we don't charge any fee to the buyer, which a lot of buyers, they love that. It's a bit of a result for them to get a tenanted property, and we actually will hold their hand through the process, make sure that when they get the property that everybody's aware. There's often a letting agent involved. Maybe the new buyer has their own letting agent. We will facilitate that smooth handover. Again, Ross and I, with the experience that we've got in the private rented sector, with the letting agency experience, with dealing with tenants and all of those things, we just work very hard to make it such a smooth process that buyers really appreciate that. And all we expect from a buyer is to pay the fair price. Now, again, I know that a property investor has to feel like it's been a success for them. It's all down to pounds and pence. There shouldn't be any emotion in it. So the seller's expectations have to be spot on as well. So that's really at the beginning for me to work out.
Okay. So, Chris, I think, again, one of the reasons why I'm quite excited about this episode as well is you're in the Scottish property market, obviously, in Scotland, and we deal with, and we're based in England, in the English property market, and they do differ. So I am quite interested here because I do know a little bit, but I'm not fully up to speed on exactly how the property market works in Scotland. So would you be able to tell us the main difference and differences between the Scottish and English property sales market, first of all?
Yeah, definitely. I am not an expert, of course, in English property, so forgive me if not everything I say is exactly different, but certainly in Scotland you have home reports, which I think there might be some kind of version of this that you can get when you're buying English properties, but the home report survey in Scotland is a very, very in-depth document that the seller, so the person that's selling the property, before they can put their property onto the internet and start marketing their property, they have to get this survey. Okay, so the survey will look at the roof. It looks for things like damp, of course. It will look at the electrics. It will look at the kitchen and the bathroom, and maybe try and give an idea, not necessarily of the exact age, but just how it's holding up. So that as a property investor, at least anyway, you get this independent professional guide as to whether or not you're going to have to spend any money on the property in the next few years or now. So the home report goes into all that depth. It gives a rating of 1, 2, or 3. So 1's being excellent, 2's being, well, pretty standard, not nothing majorly to worry about, but not top notch. And then number 3's, if it's a 3 in a home report, usually needs to be dealt with immediately. So the home report system makes the process much smoother, because not just is there that but there's also an accurate valuation of the property as well. And a lot of lenders will use the home reports as well. If they don't, then again, it's usually very, very accurate, and should mean that sales don't fall through because of this valuation thing. Or if I think that, am I right in saying, Toby, that there are some surveys like that in England, but are they commonplace?
We do have those surveys, but they're not done before the property goes to market. So it will be the buyer's job to do that while they're buying. So if they're buying with a mortgage, the mortgage will get the mortgage valuation. They can upgrade the survey if they do wish, but yes, it's done afterwards.
So that's what I mean. That's what I mean. So you don't really have the home report then, which is done by the seller, and it's available to anybody. So you can go online and just ask for the home report for any property that you're looking at online. So there's no surprises. A qualified surveyor's already been in. I couldn't really imagine buying a property and then putting as a buyer and then sending a surveyor in, unless it was an off-market purchase, maybe a portfolio or something like that. But there you are. So there's that, and then there's bidding. There's a lot of properties sold in Scotland which are offers over, and that offers over price is actually usually below the valuation. So let's say a property is valued at £200,000. So the home report, properties valued at 200,000. What you might find is that that's advertised at offers over 190,000 or 195,000. Sometimes even 185,000. But anyway, you get the gist. And what that does, it just generates a lot of interest in the property. However many people go and view it. And then as a potential buyer, you put a note of interest in, and then often what would happen on the regular market, it's not what we do at Portolio really, but in the regular market, the seller would set a closing date. And at that closing date, it could be 12 o'clock next Wednesday, let's say. And at that time, you would have to put in a blind bid.
Okay.
And that's it. So normally in the morning of the Wednesday, you would instruct your solicitor to put an offer in for that property. You would know what the offers over is. You would know what the valuation is, of course. You'd have read the home report. You'll also know how many other notes of interest there are. So you could be up against 7 or 8 or 10 other people, or more, slightly less. 3 or 4 is the minimum normally. And you would make your offer that you think is going to get you that property. And that can lead to some big offers, I have to say, because you don't know, do you? So you just think, I really want that property. I'm going to go 230,000. And that's actually not that crazy at all. What's that? That's just over 10% above the home report value. So maybe 12, 13%, something like that. So that's very commonplace for offers to be 10, 15, even 20% above the home report value. So it can be a bit of a bun fight. And that's just, but at the end of the day, it's also quite clean as well. And from a selling point of view, it's quite a strong way to do it.
Okay. Very interesting. I suppose that's the sales side. What about the lettings? Does it differ in terms of the lettings market and how lettings is operated in Scotland?
Well, in Scotland now we have a lease called the PRT, which is the private residential tenancy, and that is a lease that it came in 2017, and it basically means that as a landlord, you can't specify a certain time period for that lease. So the lease starts and it could actually end very, very quickly. Either party could end the contract in the first few months. As opposed to the old lease, which was more like an assured tenancy that you'll be maybe more familiar with. The short assured tenancy, specifically, the initial lease period would always be for 6 months. You could make it longer, but always minimum 6 months. So we have this PRT lease now, which is to give a little bit more flexibility to the tenant. But at the same time, that new lease has also introduced much clearer ways of ending tenancies as well. So there are some pros for the landlords. Pros and cons to everything, of course, but that's the lease in Scotland is a PRT lease. You can't charge any premiums to tenants, nothing at all. You can't charge any kind of fee to a tenant. I think that's maybe become the way it is in England, or becoming that way. I'm not sure.
Yeah, yeah, we've definitely followed suit from our counterparts in Scotland.
Yeah, that was quite a long time ago, a very long time ago now, really. We followed you actually on the tenancy deposit scheme. So you guys have had the tenancy deposit schemes for as long as I can remember. We brought them in, I don't know, 10 years ago or something like that. So not that long ago. And there is probably more safety regulations in Scotland, Toby, in terms of the electrical testing, Legionella risk assessments, PAT testing, portable appliance test, that is. So I think for many years now we've had all of these safety tests that have been involved. The gas safety test is very much a given, and I'm sure that's been in England as well. But there's a whole raft of other safety tests that need to be done in Scotland. Not all of them are every year. The electrical ones every 5 years, so it's not too bad. And smoke alarms, heat sensors, all of these things have been in Scotland for many years, and I think that's actually a good thing.
Yeah, I think you're right there. And again, it's one of those things. Landlords will say, "Oh, I've got to do this, I've got to do that," but it's the health and safety of the tenant and the property. I mean, you'd hate for something to happen to the tenant, and you're then creating better properties for these tenants to live in, safer properties. So it does have to be done, and I think it's only fair, and it is a good thing. So yeah, I've got no issues with those. I know they do keep coming up, and if you're not used to it or you never had it years ago, it can be frustrating, but you have to move with the times, and we want to provide good properties for these tenants. So it has to be a standard. So I find it absolutely fine. But that is quite interesting there to see. I mean, especially on the health and safety side, because yes, England's again similar, very big gas safety, all that sort of stuff. So that's good to see, and it's like I said, providing good quality properties for all these tenants. But what about the property market in general in Scotland? How's that performing at the moment, and how do you see that moving forward?
It has the property values in Scotland across the whole of Scotland, and UK property has never been more regional, has it? Anyway, I mean, it'd be the same in England. There'll be pockets of England which are performing way differently from other pockets of England, and it's the same in Scotland. But across the whole of Scotland, it's risen by 6.7%. So property values have gone up 6.7% in the last 12 months. The average price of a property in Scotland is 194,000. So it's going really well. And who actually would have really expected that? With when COVID first struck, there was so much doom and gloom, don't you think, Toby? That everybody, and this is not just obviously with Scottish property, but across the board, that there's going to be a crash, that property prices are going to plunge. A lot of people were predicting Armageddon. We had a lot of property investors that were still active, and we were still doing a lot of work, but there was lots of investors who were saying, there's no way I'm going to invest just now. And I suppose I can't really blame them, but it's been great. And I think that whilst lending is available, and especially at the kind of rates that they are, which are they're not crazy rates, I think that the loan to value in general and the stress testing that lenders do these days is much different than what it was 2006 2007 before the crash. Well, I think some of those lessons learned, but it's still very strong, and it's still there may be some more hoops to jump through to get lending, but lending is still very much available. Property investment still really works. There is still a housing shortage, so the laws of supply and demand. Private rented property is still absolutely 100% needed. So I think that buy to let is strong. I think that Scottish property in general is strong. And the other thing about Scottish property, probably I would say, is the level of affordability is really strong, because if you look at average wages versus property prices, it's not crazy. Some parts of Scotland property prices are quite high, but they're not off the scale, and still very affordable.
That is good. I mean, yeah. Again, we had the same, obviously, of course, when the pandemic hit. Investors and buyers in general kind of just sort of sat back and said, "Oh, hang on a second." But again, there was a majority, still quite a few overseas that were still buying, and it was the same conversation I would had with lots of buyers were a bit sort of on the fence. I would say, look, the fundamentals, what prop up the property markets are there and they're not going anywhere. Supply and demand, lending, etc., etc. All the points you picked up on, and they weren't showing any signs of going anywhere either. Obviously, the government was doing a lot to sort of stimulate the market and keep it going with here, sort of stamp duty holiday, etc., etc. So it had the signs, and of course, supply was just dropped out of the market. Demand was still there. So
That's so right. I mean, we would have investors come to us and say, "Oh, I'm not buying just now because I can't, because I'm competing against so many other people, and properties are going for some crazy prices. I'm not going to compete." Well, my answer to that was always, "Well, why don't you come to Portolio? Because we sell fixed price properties, and you're not competing against home buyers, and it's all there for you."
yeah, that's that's what we have, because obviously we deal with new build and off plan, and same scenario there. We deal with the developers. You're not up against people, you're not in bidding wars, you're not going to viewing days where there's 10, 20 different viewers and it's absolutely crazy. You know the price of the property, you know the price per square foot, got all the comparable evidence, you know what you're paying, and you know you're not going to end up overpaying.
One other thing about Scotland and England is the stamp duty holiday, if we call it that, it's a reduction in Scotland, wasn't very generous. Not nearly as generous as the stamp duty. And of course, we call it LBTT, but anyway, it's all stamp duty, really. The stamp duty holiday in Scotland wasn't very sexy. It wasn't many reductions, and it was stopped months ago. So I do believe that maybe in England there might be an impact from the stamp duty holiday ending, because it's actually been quite a good stamp duty holiday. It's lasted for quite a long time. In Scotland, it didn't last that long and it wasn't that good. So so it's the impact wasn't really that strong either way, which is maybe not a bad thing.
Yeah, exactly. I mean, all it's done here is pushed up price. Well, what we can see in the data anyway, and what it implies is that it has pushed up prices, and probably what you saved on the stamp duty, a lot of people now are paying in property prices where they're having to go into bidding wars, etc. So, yeah, I mean that's a discussion I could go on for ages, but yeah, that's a different conversation. But one thing I will say is it's not going to negatively affect the market when it does end. May dampen demand slightly, but not a lot. So, what about the Scottish property market going forward? Because of course it's all going well at the moment. Same here in England. What do you probably see maybe the next 3 to 4 years? Sort of how that's going to play. Is it going to carry on, or do you think it's going to slow down or dip? What's your thoughts on that?
Well, I think that the needs and the wants that people have just now, in terms of wanting to move to somewhere with a garden, or if not moving, then maybe extending their property, will continue. So I think some of the inner city stuff won't see much capital growth, if any at all. But I don't think it will crash, because in actual fact, I don't know. This isn't a very recent figure, but maybe a few months old. But I think that the capital growth, the increase in the value of flats, so that more inner city properties still went up in Scotland over the last 12 months or so. So there is appetite for all of these properties. There often is a chain, somebody selling a flat to get a house that's further out. So I think that people are still going to want to be moving, and there's still a lack of property. We're not meeting our quota for building properties, and it's not going to be great capital growth. I think that if you look forward 3 or 4 years from where we are right now, property prices might be up, maybe 4%, 5% or something. So might just be going up sort of a couple of percent per year. But I don't. It's not going to fall back. I mean, in Scotland, as it would be in England as well, there's a whole swathe of really cheap property. Okay, that is only going to be bought by a property investor, and probably the value of those properties aren't going to be going up very much at all, and they might slip back down. But there's going to still be lots and lots of need from people renting, so the yields are going to be great. They're going to be 9, 10, 11, 12% gross yields, and the returns on them will be fantastic, but not in terms of capital growth. So I think the properties that have gardens and good sort of city centre properties, they'll still do fine. I think again the capital growth of the houses will be probably continue to be 4 or 5%, each year, that kind of thing. I really can't see any reason why that would change. I don't think that furlough ending is going to be that impactful. I think that the people that are buying these properties, they're not normally working in hospitality and in tourism necessarily. I think, in fact, I've never seen so much money kicking around over the last 12 months. It just doesn't seem to be any shortage of cash around us.
Yeah, I know. And I think also when people talk about the furlough stopping and that's going to stop people buying within the property market, I think, again, what you have to realize is that a lot of people on furlough, they're not actually in the market buying because they're on furlough. They're not going to get looked at realistically from a mortgage lender if they're on furlough. So that even when it does stop, if they're not able to buy, I don't think many of them would have been in the market buying anyway. So again, I don't think that's going to massively impact the demand, but we'll see. I suppose time will tell. But that's positive to hear that it is going to look to sort of carry on that way as well. So in terms of when you're talking to investors throughout Scotland and the ones you deal with, I mean, what's the number one mistake that you see them making, and how do you help the investors that you speak to sort of prevent themselves from doing it?
Well, I think it's often human nature to buy something that you would like yourself, and maybe some people see it as a bit of a project, and doing both of those things seem to discount the bottom line. The harsh reality of pounds and pence, and making money from the process, and of course providing good accommodation. But if you're going to become a property investor, then you have to really do it with a goal in mind. So start with that end goal in mind. What kind of income do you want from property? And generally speaking, the income comes from not just one property but a number of properties. And I think that some people they just start buying a number of properties, and it's not until maybe they've got through their first 3 or 4 that they start to think, you know what, I've wasted thousands of pounds on buying this property, and then doing all this work to it, and I've not really necessarily increased the value of it, and I've not necessarily increased the rent all that much that I can get from it. So from my point of view, I think you do get a lot of people that choose a property that needs a lot of work, and that could just be basic safety work, or it could be aesthetic works, and their budgets get away from them, or again, buying a place that they would like to live in, and actually overpaying for that because they're competing against home buyers, and they end up getting into this bidding war, and they get emotional about it, and they end up, it's so hard to make any kind of capital growth if you go in and put an offer in that's way above what the value is already. so so for me, pay the fair price, pay a price that's around about the value of the property, get something that doesn't need necessarily too much work, depending really on who you are. If you do have a method of finding doer-uppers that you can get for way below value, and you can add value to it and then refinance it later, that's a different thing. But we come across so many regular vanilla buy-to-let investors who do waste a lot of money and time.
Yeah, no, that's very good points there. So I suppose, is that the sort of advice that you would give to an investor starting their journey in the Scottish market, or would you sort of give them a different advice?
I would just the advice I would give them is to just do your research as much as possible. We do come across a lot of landlords that come to us who maybe bought a property a few years ago, and unfortunately they overpaid for it, and then it makes it very hard for them to be able to, if they're trying to change things now and sell the property and take that money and invest it in something else or whatever. It makes it very difficult for them to do that. They've just overspent because they don't quite know what's happening on the ground. They've maybe known one person, and of course that person has an agenda, and they've gone with that. So speak to a number of people, and build a bit of a power team. Don't just speak to one person and think, okay, well, I believe them, that's fine. Whatever, if you're not going to be in, especially if you're not going to be in living in, if you don't live in Scotland, okay, then you won't know all the sort of areas, and you won't really know what you're getting for your money. You won't know what kind of tenant you might be looking for. So just research and speak to as many people as you can. I think that's the bottom line for it.
Yeah, no, that's great. I mean, yeah, research is key. Something we're very hot on and always trying to advise investors that due diligence research is key. Actually, a question that I've got, which I found quite interesting, especially when looking at the Home Track house price index report that comes out. What's the deal with Aberdeen? Because the prices there are going down in comparison to obviously other prices like Edinburgh, etc. And I mean, I read somewhere that that's related to the oil industry and prices. Is that correct? And what's going on there?
Yeah, that's right. 2016, I think, 2016, 2017, the oil price crashed, and in Aberdeen, it was all to do with oil. So people would be living there, working there, coming from all around Europe and the UK to live and work in Aberdeen, offshore or onshore, but they would have properties in Aberdeen. So for the rental market, for example, when the oil crash happened in the days and weeks leading afterwards, letting agents and landlords would have tenants coming to them that were maybe paying something in the region of £1,500 per month or 2,000 or whatever it was. They were then asking to pay half that. So,
Wow.
if not half, then, big percentage down. So rents crashed. So yields then crashed. Okay. The population, I guess, I don't know the numbers, but I guess the population went down because people weren't living and working there anymore. They were doing other stuff. A lot of people actually got into property investments. There's lots of property investors in Scotland who used to be in oil, and they in Aberdeen there is a lot of vacant property, I have to say. So a lot of property that's on the market for sale just now, just sitting vacant. And from a property investment point of view, normally there is still interest from property investors because they see the opportunity, and so we do sell quite a lot of Aberdeen property, and it really depends on the yield. The HMO properties, the multiple occupancy ones, the student ones, there is still a good market for selling those, and we get good sale prices for landlords selling them. The 1 and 2 bedroom ones, the discount that you have to give is, can be 20% below the actual value of the property. 10-15% is doing well. Just it really depends on what the rent is at that moment and so on. Each situation is different. And Aberdeen is still a great city. It's really going for it on the renewables. So instead of oil, there's tons of wind energy stuff going on, and it's reinventing itself as the European capital of renewable energy. They had the BBC Personality of the Year, Sports Personality of the Year award ceremony up there, and they're doing lots of different things to build tourism, to change Aberdeen from being really what it was, which was a one-trick pony, and it was all about the oil and industry prices there. So it's not, if you're buying property in Aberdeen now, I wouldn't say that the price of the property is any more linked to oil now. That used to be the case, but the prices have come down so much, and I think it's bottomed out. And I think now is a good time to buy Aberdeen property. But anyway,
Interesting. Okay, so do you see it sort of going forward from here and obviously starting to make a bit of a recovery then?
it will. I don't think it'll ever recover to where it was, because where it was just ridiculous. I mean,
Yeah.
there's a story that I always hear is to do with the Audi garage in Aberdeen. It was the busiest, most successful Audi garage in Europe. Um, I don't know if that's impressive or not, but I always remember that thing. But basically, there was so much money in Aberdeen at that time, and that party has ended. So Aberdeen property will start to come back. It won't get to where it was before, but it will be in line with other towns and cities. It will just be the capital growth there will hopefully just become similar to the capital growth elsewhere. And houses in Aberdeen have actually had a bounce as well. So, that stock of property, they've been selling quite well comparatively compared to how they used to sell in Aberdeen. So there are some green shoots there.
Interesting. Interesting. Okay, so if you went back to the start, where it all began, what would you do differently as a property investor and business owner?
Well, I used to be a very janitorial style letting agent. That's why it took me a long time to build up a decent number of managed properties. And I don't think really for me, property investment, the idea of being an active property investor isn't something that really ever sort of, believe it or not, came to me um, until you know I really got into sourcing. And as a sourcing agent, I could sort of really see how property can provide an income. And when I was a letting agent working for 100 or so landlords, I was just so intent on the job of looking after their properties well, and fixing stuff and reletting or letting the properties well. I had a good team of staff. It was a really good company, but I never really quite got how property investment and working with property investors could help me grow that letting agency. And equally, I never really got property investment myself. I've stupidly only had one buy to let my whole time, and that is something that I'm going to change next year as Portolio grows. That's not quite taking care of itself, but I want to start to build a portfolio. I'm in my sort of mid 40s. I'm going to looking to do this for retirement, and just because I really want to, I just can't wait to start buying some buy to let properties. So that's what I would do differently. I would I would have thrown myself into the investment side of property much before now, of course.
Oh, no, excellent. That's great to hear. Very exciting stuff then. Do so at Track Capital we tend to get quite a lot of overseas investors and buyers. So do you have many overseas investors that have a focus on the Scottish property market? And if you do, so what countries are they predominantly from, or which are your biggest buyers?
Yeah, we do. We do have a lot of overseas interest and overseas buyers, and I would say England isn't overseas, but we have a lot of property investors based in England, London, but the whole of England, Manchester, etc. So we a lot of activity there. But Hong Kong, Singapore, Australia, South Africa, lots of interest from all of these places. United Arab Emirates, Dubai, of course, Abu Dhabi. So yeah.
Excellent. So quite varied, which is good. Yeah, and I'm not surprised. It sounds like it's a good market there, and yeah, obviously similar to England, prices are doing well. So I'm sure investors are looking at that, and hence why them wanting to get involved. So in a few sentences, maybe summarize Portolio and why investors use you, and I suppose landlords, and yeah, the process involved.
Yeah. Well, we are a safe pair of hands for both buyers and sellers. We we just tell it like it is. There's no point in us if you're a landlord thinking of selling your property, then again, our goal is to get you the best sale price possible, but we also need to be realistic as well. So it's a balance, and when we just tell it like it is, we understand the theory of shared success. Again, we have long-term relationships with buyers, and we really, really appreciate them. For every property that we sell, we carry out the required due diligence so that anybody buying a property from us knows that it's going to be a smooth transition. They'll get a safe property. And we never sell a property with a bad tenant. And again, with our experience, we know when a tenant is bad, and we know the questions to ask and the things to do. It's in our contract that we don't do that. So, investors, buy multiple properties from us. So if, our reviews are superb. And if you look at the kind of the wording on that, it's to do with good old basic customer service. Ross and I get it. We understand that people need to be communicated to very well. And that's something that we do well.
Yeah, I mean, communication is key. It's fundamental in general, but in the property business and the property industry, it's a massive, massive part. And if you've got repeat business and returning investors and even landlords, that also speaks volumes for your business. So that is really great to hear. So why don't you let our listeners and investors and even some landlords know, if they are listening, how do they get in touch with you, Chris?
Okay, well, I'm not sure what the best format to say is, but you can call us. Email property@portolio.co.uk. Our website is www.portolio.co.uk. Portolio is Portolio. I'm Chris at portolio.co.uk is my email address. We're on Facebook. And it is we're called the Portolio Property Market on Facebook, and you can see from Facebook a lot of the flavour of who we are. The number of the office is 0333 344 2855.
Brilliant. Well, I have really enjoyed this episode this week. You've definitely taught me a lot more than I originally knew about the Scottish property market and again your business in general. So thanks for coming on. It's been really good, really appreciate it. And it will be interesting maybe in a year's time or maybe longer to get you back on and find out a bit how your property investment journey is, because it sounds like that's what you're embarking on next. So it'd be very interesting to see how you're getting on, what you're doing, what strategy, etc. So that'd be really cool. But thank you for coming on. We really appreciate that.
Thank you, Toby. Thanks, everyone.
Thank you. Well, that's all we've got time for this week. Thank you again to Chris from Portolio for joining us. We really appreciate your time. Thanks for joining us, and we'll see you next time. Bye-bye.